if you're not from Australia. Please stick around. Can't afford to buy a home? Get out of Sydney and Melbourne. Can't afford to buy a home? Get out of Sydney and Melbourne. Things are starting to hit the fan, and Australia is one country you want to sit back, have the popcorn. You need multiple division class in a city. You think someone's gonna drive 2 hours to take out the trash, 2 hours to go clean the streets, 2 hours from out of town to go to the waterfront properties? The infrastructure will crumble. Because Australia is one of the very few countries that's put zero to no measures in place to cool down the market. And it's piping. If you're like 4th, 5th generation proper Australian, if you're Australian proper, and you can't live in your own city, in your own damn country, and your parents and your grandparents and your great-grandparents have been paying taxes all their lives, what, to cater? To cater to what? If you can't live, I'm talking if you're Australian proper. What have I been talking about for the last freaking 5 years on this channel? The same broken record. Housing is overpriced and unaffordable, and it's pushing people out of the major cities. So you're not getting the full picture, eh? Here's the situation, English-speaking nations, nobody's ever paid the way that we do. You know my motivation, given my reputation. Please excuse me, I don't mean to be rude. Housing crisis screwing you. Oh, you know, housing crisis screwing you. Here, you know what? I'll make it simple. How's about this? Can't even barely read the names on there. Let me tell you something. Do what Vancouver did. They implemented. People are like, oh, stop picking on the foreign investors. It's not the foreign investors. Okay, it's not. Let's put a foreign investor tax. A lot of people are weighing in on this. A lot of people being affected by not being able to own a house. A lot of people. It's the biggest talked about topic in all of the English-speaking world, and there's very little to no one covering this damn topic, which is like private people, like just people like me, just nobody's covering it and trying to gain attention from people. It's really... The focus point of our concern is the housing market. And earlier this month, we discussed, remember, I discussed this with you guys. I read that article for you guys, if you've been following me. How the world's longest running bull market, 55-year bull market, in Australian house prices appear to have come to an end. We followed this up why Australia's economy is a house of cards. Remember that article, guys? I read it to you guys. This is what I've been talking about. The party's over! The free interest rates, the low interest rates, sorry, free money, the stimulus, everything that's happening, the foreign money coming in, it's all coming to an end. It's coming to an end. The party is over for Australia's 5.6 trillion housing frenzy. Can you believe trillion? I'm going to read this title and you guys prepare. Sit down. You're going to have to sit down for this one. This one you got to sit down for. Grab a seat, relax your feet, because this one's going to come on hard, especially if you're living, depending on what part of the world you're living in, because every English-speaking country is being bought out under their feet. And that goes back to the video I said, is the Canadian youth being bought out? Or Australian youth, New Zealand youth? If household debt outpaces economic growth by 5 percentage points, or if house price growth outpaces the inflation rate by more than 4 percentage points. In a stark warning by the credit rating agency, which already has the major banks at AA negative credit ratings on a negative outlook, it said that the economic risk was on the rise in Australia, which may force it to downgrade Australia's banks. As a whole, the Australian economy has grown through a property bubble, inflating on top of mining bubble, built on top of commodities bubble, driven by a China bubble. We highlighted some scary metrics for Australian housing bubble cited by Bloomberg. In particular, we showed how the value of Australian housing is more than 4 times the gross domestic product. Yes, let me calm down here. This is higher than other Western nations like New Zealand, Canada, and the UK are experiencing their own housing like bubbles. The ratio of house values to gross domestic products in the US in the U.S. seems positively tame in comparison.
Said rising private sector debt and house prices were the two key indicators of economic risk that the agency tracked. While S&P gets monthly updates on private sector debt, its main source of property price trends from the Australia Bureau of Statistics, which releases data less frequently. So you're not getting the full picture, eh?
This damn inflation. If I had some gold or Bitcoin, it would be good. The realtors, you know, if they lie, baby, I need the truth. Here's the situation, English-speaking nations, nobody's ever paid the way that we used to do. You know my motivation, given my reputation. Please excuse me, I don't mean to be rude. House in crisis screwing you. A tired 1950s brick house in the prestige enclave of Sydney's lower North Shore sold for under the hammer for almost $1 million over its reserve Saturday morning. $1 million. That's like 10 million or 13 million Mexican pesos. That's so much money. Right here, the number of Australians optimistic and the year ahead has dropped to never before seen low as mortgage holders eye of the combination of record high housing debt and the possibility of interest rate hikes in 2018. According to Ray Morgan survey taken in mid-November, 31% of people think 2018 will be better than 2017, the lowest figure record since the survey began in 1980. A lot of people in Australia are saying, oh, stop blaming the foreign investors. They have nothing to do with the price hikes, and people are always investing. No. Like I said, if you go to my other videos, you would understand when it's a free market, when you're living in a free market country, all the English-speaking countries except South Africa are free market countries. Come in, whoever's got the most money, buy. If you're from here, we don't care. It's who's got the big bucks come in. 20, 30 years ago, I know I'm saying this like a broken record. Watch some of my old videos. 20, 30 years ago, when your grandparents or great-grandparents went to Australia, they came with a duffel bag and 20 bucks. They managed to buy a house, put your parents through school, and your parents went through school and put you through school that's watching this right now and took care of you and raised you. Now it's not like that no more. You come with 30 bucks, guess what? You're going to be you're homeless, and to get off that plateau just to rent is almost next to impossible. Things have changed. It's free market countries have sold to the highest bidder.
Banks allowing to bend over backwards and allow certain criteria that would never be allowed 10, 15 years ago.
Of motivated sellers! Lots of motivated sellers selling their 2,000 square foot home for $3.85 million. Motivated to sell $3.85 million! You know what I'm saying?
And it's always the working poor or the middle class that ends up losing in the end. And when it's time to bail out, it's the working poor's pensions and the middle class pensions that end up bailing out. And it's usually the people that didn't buy into this rat race that have to suffer for the others that did. So it's really sad the way things are headed in this really tricky economy that we're in, because it's a different economy. This is the first time in human history where the Canadian proper can't buy into their own cities. In their own major cities. They just can't afford it. American proper completely bought out of the West Coast, and New York and Massachusetts is suffering. Our population has been growing quickly, but we have not built enough transportation infrastructure.
For trends in the housing market, I've been talking about the Australia housing binge or debt-fueled binge that's been going on for the last, 5 years, if not even more. It's experienced in every English-speaking country, but Australia is one of the worst of all. Another big warning on debt for Australia. When will we listen? Now, the Bank of International Settlements has flipped on the alarms. Uh-oh. That's the whole set of global financial institutions sitting in our rearview mirror telling us to slow the heck down. Well, what do you expect when you're giving money away for free and fudging up loan documents so people get approved and selling products to people that they don't qualify for or they don't need in their lives? What do you expect with that anyway? I think it was Sydney that they have to build segregated condominiums for police officers, doctors, lawyers, surgeons, garbage men, Because mailmen, because they can't afford to live in their own cities that they work out of, and they don't want to commute for 3 days to get to work.
And under the government's own projections, Australia will grow by nearly 400,000 each year, with Sydney and Melbourne accounting for roughly half of its growth.
Okay, I might be out of my mind or out of my tree. 10% is huge! If you paid $1 million for your house, it's worth $900,000. They're making it seem like 10% is not. 10% is huge, and if it keeps falling that much year over year, it's actually going to be huge. I don't know what the heck is going on. 10%, you are underwater.
Therefore, the immigration intake will have major implication for living standards, including whether you can afford a decent-sized home. I think that's happening right now. How long you spend stuck in traffic. I think Melbourne and Sydney were only designed for about 800,000 people. I don't know, but I'm guessing. Environmental sustainability and productivity.
We'll pay attention this time, or are we too revved up on our $1.7 trillion housing debt bender to stop? The Bank of International Settlements, BIS, turned on the flashing lights this week. Property prices had taken off, spurring by high immigration and investors. Construction had skyrocketed. All you saw and looked on the high horizon were cranes. House prices kept appreciating in gigantic steps. Who cared if salaries weren't following the same pace? Until one day it all came crashing down. Let's be clear. I'm talking about Spain. Its property boom and crash that followed in 2008. So, I don't know why, but Australia has been following the whole Spain crash. Anyways, the National Australian Bank, NAB, has slashed its previous forecast for Australian home prices, predicting markets will continue to track downwards well into 2019. No, you don't say. NAB's quarterly residential property survey, and the bank said the property price plunge at the start of 2018 more significant than initially expected. You know what that means? It's going down, buddy. A house shouldn't be more than 400 grand unless you're buying something really up there. Like, really up there. So let's go to this segment of the show that we call Delusional Mike. These properties don't exist. Georgia, that's how many are for sale. That's one whole house. Let's look at this house. Delusional Mike has never been anywhere. He's Delusional Mike, and this is fair. Look at Delusional Mike. What does he know? Houses everywhere are going up, so look at that. Delusional Mike. Okay, well, it's a flash in the pan. We got a flash in the pan state. Let's move to Tennessee. Delusional Mike. Mike is so delusional. It costs $1 million to build a house, so that's why houses are expensive. But these houses, these materials came from the moon. Let's go to Oklahoma. Delusional Mike. Whoa, sorry, that we just went there. Delusional Mike. Texas. Let's go to Texas. Delusional Mike. Look at that for 300,000. Delusional Mike. A mortgage on that. Let's see what that costs. That house is huge. 5 bedrooms and 4 baths. Look at that stone and all that stone wall. 1,386. I know someone that's paying $1,400 for a 1-bedroom in Vancouver. And they don't own it. Delusional Mike. Let's move on. Let's go to Indiana. Delusional Mike. Yeah, see, in Australia, that house to build, that's going to cost $800,000. That's why we're selling it for $1.2 million. Delusional Mike. Delusional Mike. Delusional Mike. All over. That's why the Average house price in the U.S. is still well under $200,000. Benchmark across the U.S., guys. Stop the press! What is going on, people? I got a article that was written here a few hours ago, and I want to share it with you guys. And it's from Down Under. And you know what? It is happening in every English-speaking country is experiencing the same phenomena. Sydney Morning Herald, first annual home price fall in 6 years. What have I been telling you people for the last decade? House prices in Australia, capital cities, have fallen on an annual basis for the first time since 2012. Oh my God, what's going on, people? But the drop led to falls in Sydney, Melbourne, isn't considered significant in the scheme of things, given the dizzy heights of prices had reached. Capital city houses fell 0.7% nationally in the 3 months of June, according to the latest Australian Bureau of Statistics Residential Property Price Index released on Tuesday. They also fell 0.6% during the year to June 2018, the first annual fall recorded in 6 years. Annual fall, not monthly, not quarterly, annual fall. Those national falls can be largely attributed to price drops in the big markets of Sydney and Melbourne. The drop was greatest in Sydney in the June quarter, where the housing prices fell 1.2%, marking the fourth consecutive quarter in which they have declined. Prices to June, Sydney's second consecutive quarterly drop. The figures for the quarterly slightly worse than those posted in CoreLogic Sydney 0.9% and better than Melbourne's negative 0.25% for the quarter. Across the nation, ABS figures were largely in line with the CoreLogic numbers released in July. Less demand for homes and tightening of lending to investors played the role, as far as ABS chief economist Bruce Hawking said, but he stressed they weren't significant in the bigger picture. Yes, they are! These were falls of pretty high levels, he said on Tuesday. Sydney, over the past 5 years, is actually up 56%, so he quoted, "Where we've come from, these aren't significant." They tend to support those who suggest that we're probably in for a period of sustained flat prices, rather than any of those catastrophic falls that some of more dramatic forecasts tend to look at. House prices were also down in Darwin, 0.9%, and slightly down in Perth by 0.1%, but the prices rose in the June quarter in Brisbane at 0.7%, and Adelaide 0.3%, and Canberra 0.3%. I probably pronounced that wrong, don't freak out. And guys, remember, prices in certain areas are going to be skewing the benchmark average price across the board, because the cheaper cities and cheaper inventory is what people jump on. FOMO, fear of missing out. So a lot of people go to Hobart and all those other places, and they start propping up those markets and creating a housing problem in those areas, right? The softening market was noted in minutes of this month's Reserve Bank of Australia's board meeting, which were also released on Tuesday. Established housing market conditions overall had continued to ease, the minutes say. Housing price has been falling gradually in Sydney and Melbourne, and in recent months, the price declines had become more widespread across different suburbs and price segments. The RBA minutes say prices have fallen only moderately after significant growth in the recent years. So, guys, you know what you're looking at a crash? It's going to go back to normal levels. You're looking at a 40% decline. I've been saying 40, 60%. Everyone's laughing at me. Yeah, no. Listen to me, guys. Affordability is what's at stake here. Australian proper is what's at stake here. Once the middle class stops buying, consumer confidence goes down, and this is what happens. The RBA also flagged that due to the improving economic signals everywhere and notwithstanding doubts over global trade conditions, it is still expected the next move in the official interest rate would be upwards. JP Morgan chief economist Sally Alud said the Reserve Bank appear to be talking to the slower property markets and recent spate out of cycle interest rates in its stride. There's a little sign of concern on housing, nor recent rise in mortgage rates, she said. This is nothing in the minutes to suggest changes are immediate in the RBA's guidance on the rates to forecast. They were also up a whopping 3% in Hobart. Remember what I said about Hobart a minute ago, guys? Employment growth in Tasmania and more visits from tourists have likely pushed up the prices in the island's state capital, Mr. Hawking said. No, it's the middle class fleeing the big cities. That's what it is. They seem to be outperforming others for quite a while now, which is unusual for Tasmania. No, it's not unusual. When you can't afford to live somewhere, you move to where you could afford to live to, or live within your means. And a lot of people got smart. They left the big cities and left the tab, the infrastructure, all the taxes that they used to pay in those cities, and absorbent crazy rents. They moved to affordable cities, and that's a smart thing to do. They're marching to their own drumbeat. The average price of a home in Australia is $686,000. The figures show the total value of Australia's 10 million residential properties, $6.9 trillion, which has fallen $13.3 billion. So if that's not any sweat off your brow, $13.3 billion, let me know. Put that in your pipe and smoke it. Let me know what you guys think. And where are the people saying, oh, if you don't buy now, you'll never buy. You'll never own. You're bought out of the market forever. Where are those people? Comment below.